All right, hello everyone. Today is December 5th, and we are going to be analyzing Google, a stock that is very close and dear to many of our hearts. And again, you're with me, the swing trader, technical analyst. I take opportunities in charts. I look for swing trading opportunities based on pure price action and technical analysis. And to start with Google, we're gonna get a bird's eye view from the weekly chart. What this means is that each one of these candlesticks is a week performance. If you are not familiar with Japanese candlesticks, I do suggest that you learn a little bit about them. They are fantastic, and it's a great way to see the charts and start plotting a history to help us with probabilities of where the future is going to be. Now, to look at the history, sometimes I like to look at the monthly just because it allows us to simply see how crazy this stock has traveled since inception. And it's basically a continuous uptrend. In Japanese candlesticks, I also like to identify in these pivot points when things are starting to turn around. You get to see some of these dragonflies, they are called sometimes, or dojis, which is basically a long stick with a small body. We could see this one here, this particular for September. I really like it simply because it has a long wick, and that means that at some point there were a lot of sellers, and halfway through the month buyers came in and pushed all that all the way back up, ending on an upside on a green candle for the month, which continued forward into the few days coming up. This alone gives us some indication for a potential continuation to the upside, especially because of the uptrend that is coming through, or coming from, I should say. But we don't know that yet. So let's dig into the weekly and start doing a deep dive. In the weekly, I like marking these prior highs and prior lows based on this uptrend specifically. What I mean by that is that if the stock were to take a nosedive from here down, now suddenly it will have made a new low, and we will actually not call this an uptrend anymore on the weekly chart. So that being said, I want to remind you that I also don't enjoy putting just line. I like to make kind of a range, because if I'm going to take a bet on the downside, I will mark this as an area and not just a line, which I usually mark like this. And I just like taking that upper candle and lower candle, making a range. Okay, from here, another thing that I want to point out is these prior lows from 2022. If I were to just simply plot a line there, you will notice how it tried to cross it twice. It couldn't, and that took a nosedive from there, falling. And I believe this is more or less like 40% that it declined at the time, about 42%. Since 2021 November all the way to about January or beginning of 2023, just to turn around later. It also acted as some resistance here to then blow it out. And if you notice, prior resistance became new support right over here, which pushed this once again to the upside. So it's good to look at the history of the chart from that perspective. Now this weekly giving us this playing field, or this range to play with of where we are. We could now go into daily and understand that here what we're going to be looking at is also at the trends. The trend on the daily, it's quite important and followed by many traders. And there are various ways of measuring a trend. I mean, it's not a science, exact science, but what we could do is we take the price action where it is at right now. We go to the prior lows or prior highs, the prior pivot, and start our measuring there. From here, it could be either one of those two pivots, and I'm going to bring it down either to this pivot over here, this one over here, or we might as well continue to the prior low right over here, and just skip this small basing or sideways action that just happened in the middle. And then from here, our next pivot will be, so I'm having a hard time right here. Okay, so when we mark a trend like this helps us understand now that from here to here, we're having higher lows. So we will expect this trend to continue. And we also have higher highs. Where it is here or here, the image and the picture is the same. It's an uptrend, right? And from that perspective, let me just delete these green lines now. From that perspective, it's telling us we're safe in a sense, or we're stacking the odds in our favor of a long trade, on a trade to the upside, because the weekly and now the daily are both showing an uptrend, and we also haven't break that. If we were to mention that this part over here is our last pivot, where we measure that uptrend, what we're saying basically is that if the stock were to fall this way, I'm just going to make how it would look like a red candle. Let's say if it were to fall past that point, now the uptrend on the daily it's broken and it will be sideways now. Another way of looking at this is that if it were to make a new high over here, now we have a continuation of our uptrend because it has a newer highs, right? Based on the weekly selection that we did, and that's why I like to look at the weekly, we had this playing field over here on both sides. We're right in the middle of that range. I usually don't like playing in the middle of the range. I like to wait for opportunities on either side, whether it's on the upside to a potential short, because we're on the higher or more expensive side of the stock, versus in this end where it will be the lower end or the cheaper end, let's call it, at 150. That if the stock were to plummet, even though the daily trend will be broken, I still would look at an opportunity to go long, simply because it has fallen to a level of support that would like. That being said, for those of you that want to be more aggressive, I see opportunities, and this is based on the odds of it continuing its uptrend. Again, Google is also a strong company with strong fundamentals, so we had that on our end when we are looking for longs. More than this bottom over here, I actually like this section over here. I like it because it had shown some base in action. So it took some time, about 3 days of action there, basing. And from there, it just pulled out in about 3 days, where it did enough price action to move the stock significantly. So these bigger green candles show more emotional buyers coming through, versus banks and institutions spending more time making their decisions and perhaps making some decisions at 170, leaving some buyers still outstanding over here. So I'm going to mark this area over here for a potential trade to the upside. If again, this is not an actual suggestion to take a trade, simply what a technical analyst will identify on these charts. Something that this area has going for it as well is the moving average, the blue line over here. That's our 50-day moving average. It's used widely in the trading world. The one below, this one over here, is the 200-day moving average. And when the 50 is above the 200, we could also mark that as an uptrend, as another type of rule. If you notice this price action over here, let's just mark it with this yellow rectangle, continued for a while. And if we were to expand it, that's exactly once the stock left to the upside and it came back, found more buyers here still, as I mentioned in these base in actions, buyers still outstanding wanting to buy the stock again. And that's maybe but the bet that I would be willing to take on this section over here, betting that like there will be buyers still outstanding. If that zone were not to work, I will still consider this bottom pivot over here just before the trend changes direction. And this is simply because it's Google. So what I'm saying is that it will turn out to be a trade that will look like this. Perhaps we could put the stop loss below that pivot low, and it could be either an entry here at the 170.50 mark, or either here, which will offer an increased reward to risk ratio, but we may get to the possibility that the stock doesn't go all the way down. If we were to leave it this way, and where to extend our target is the next question. We cannot just go crazy and select things on the upside. The reason being, especially for swing trading, not for a long-term trade, is because when we have things like these gaps or areas, if you notice the stock pierced barely through it, found in some supply, found in some sellers, and it just pushed back down right away, both times. So there's still a possibility that that could happen again. In my eyes, if this already happened twice, there are less chances of it continuing. And I'm willing to extend my target all the way to this upper range of the weekly. So I'm going to push to the 190 perhaps as a target one for me. If I were to mark it this way, it could give us an amazing reward to risk ratio of almost 9, 8.8 in this case. But if we want to be more conservative or actually, well, more aggressive, because this will increase our risk, the risk to reward ratio now it lowers down to 3. It's still not bad. That means that out of 3 trades, we could get one, and we get paid 3 times what we bet, our risk. Now, the risk is up to you. You could select that. And again, this is not investment advice, or I'm not saying buy it here. This is simply higher probabilities of a trade, of a better trade here than just buying it in the middle of nowhere without any analysis whatsoever on it. So that's about it for Google. There's always the possibility of going deeper into smaller time frames. We're not gonna do that in this channel, and I encourage you to learn more before taking any prior decisions. Look at the metrics if you like to mix fundamentals as well. It's always good, especially now. There are a lot of support here in TradingView. It's an amazing website that can give you some quick snapshots of the financial health of a company. I will leave it there, guys. Happy green trades. So if you like what I'm doing and you want to take a look at a stock that you're thinking or considering buying, but you don't know much about technical analysis, or you like to just simply hear a second opinion of how, where you could get into it or get out of it, I'll be happy to help you analyze this. Don't forget to comment, like, subscribe, send me the tickers that you would like to be analyzed. I will be happy to do so. And I'm aiming to do so in 10 minutes so I can tell that I'm going over by describing all these details, extra details. But I believe that we could do in just 10 minutes much, much better buys or sells of our stocks. And that's what I'm here for. So hope you could get something out of this. I'll let you go now. Happy trading, guys. Cheers.